Good afternoon, everyone. This is Christy with Van Ahn & Company. It's Friday, June 3rd. I'm going to go over the markets with you for the afternoon. You had some mixed reactions coming into these grain markets with corn and wheat closing slightly higher. Beans front months down, but deferred slightly higher. And a lot of that comes on the heel that your dollar was down $1.50 on the day. So starkly lower dollar, that does tend to offer some support to commodities in general. It wasn't always that way. You did see some selling pressure early in the day, but the buying came back through. That puts corn up about 5.5 cents on the week. Soybeans up 45 cents on the week on the front month, so you didn't see as hard of a rally on those deferreds. The weekly always goes off your front contract, and then wheat was up about 11 cents on the week. What you also had was commitment of traders come out this afternoon, and it did note that they came in here and bought 66,000 contracts of corn. Managed Money did. They bought just over 6,000 contracts of soybeans, and there were slight sellers of wheat. So you've finally been saying that for a while. Okay, they have aggressively bought beans over the last 6 months. At some point they have bought corn, but they probably will come in here and aggressively buy that, and you saw that. And it's a little bit disappointing that corn was only up 5.5 cents on the week when they bought that many contracts, but it does signal that it was probably met with some stiff selling pressure from farmers coming in here and selling some of that old crop corn. There's a lot of old crop left to sell, and so that's a little bit of a positive that you were still able to stay positive after having that much of aggressive selling moving forward. Also, what you're looking at is Informa came out this afternoon cutting the production out of South America on the beans. They left Argentina the same, but that production had just a slight decrease, and so that was enough to kind of support soybeans as well. But you are against some key resistance levels coming up on both front month and deferred soybeans. Monday is going to be a big day, seeing whether those forecasts change. They did bring a little bit more moisture in to the eastern corn belt for that 8 to 14 day versus being dry for the 18 to 14 yesterday, and so those models are consistently going to change, and so Monday will bring a new model, and we'll have to see how this market opens up. Moving into the meat markets, live cattle up about $2.50 on the week, feeders steady on the week. You did have cash trade of 127 live. Other than that, you're finally back up to those levels in feeder cattle and live cattle that you were at before the cattle on feed a couple weeks ago that you hit some aggressive selling pressure. It does look like hogs are being supportive here with some fundamental buying as well. And then those outside markets, like I noted, that dollar starkly lower, $1.50 lower, that is very friendly to commodities. And so you also had weaker crude and weaker Dow. Interesting enough, you did have a weaker Dow, even though you came in this morning having 4.7% unemployment rate, which is the lowest you've seen since 2007. So you did expect to see a little bit of support come into the stock market, but it just wasn't there. Maybe a little bit of profit taking before the weekend. Moving forward, we'll see if you're able to keep up this pace that you've seen in soybeans, and then Monday you'll bring a new planting progress report to see how much got done over the week. I do have to close with a disclaimer. Trading in futures and options involves risk of loss and may not be suitable for all producers. Have a great weekend.